Commissions and swaps. What are these things and why are they taking money away from my trades? Today in this video, we'll learn all about commissions and swaps and what role they play in the Forex market. Let's go. Alright guys, welcome back to the video. Today we'll learn about commissions and swaps. So typically, if you've ever gone into your trade history and go into your trade details, you'll see a couple of fees. You'll see commission and you'll see swap. Now, what exactly are they and why exactly are they taken away from my trade money? So simply put, a commission is going to be a fee that your broker has established for every trade that you take. For example, many brokers will charge $7 per lot traded, which means for every lot that I take on a position, I'm going to automatically pay a $7 fee, whether that trade wins or loses. So knowing how much that is for one lot, you can kind of work the math backwards or forwards, how much that would be for half a lot or how much that would be for 50 lots. But around $7 is what a lot of brokers choose to charge you as a commission fee for their services. Now, some brokers do offer a no commission account. However, the spreads are typically higher in those accounts versus your regular account. So you have to make the decision whether you're going to choose an account where you're going to be charged a lower spread and a standard commission, or a no commission at all and a higher spread. It depends on where you are and what you want ultimately. But commission is going to be a fee that you're going to have to pay the broker. And usually sometimes the broker will have the fee of commissions on their website so you can take a look and see how much you'll be charged per lot. So next is swap. So swap could be thought of a type of interest payment. This is typically done during rollover. So in other words, you're going to pay swap as a trader if you're going to hold trades overnight. And overnight may be one thing for you versus the broker. So for some brokers, after 5 p.m. EST, if you had a trade open prior to that and the trade is still open after 5 p.m., then typically there will be a swap fee. And again, swap is just like interest. So to better understand this, let's take an example. So before we even get into it, one of the first things we need to remember is that when you're trading a currency pair, you're both buying and selling at the same time. Meaning in our example of GBP versus JPY, if I buy that pair, I'm buying GBP while I'm also selling the JPY. And vice versa, if I'm selling, then I'm selling GBP while I'm buying the JPY. So with that knowledge set in place, with a swap, let's just say, for example, I'm buying GBP JPY, and then currently the interest rate for Great Britain is going to be at a 0.5%. Let's say the interest rate in Japan is 0.2%. So now we've established that GBP has the higher interest rate and JPY has the lower interest rate. Now, why that's important is because if I'm buying and I hold this trade overnight, as a buyer of GBP, which has a higher interest rate, I'm going to actually be paid a swap or interest because the interest rate of the currency I bought is higher than the interest rate of the currency I sold. So the difference between the two interest rates will be the swap that will be paid out to me in my trade. This is typically done automatically. Now, the opposite is true if I'm selling. If I'm selling GBP JPY, meaning I'm selling GBP and buying JPY, that means that I'm selling at a higher interest rate and buying at a lower interest rate. So if I hold this trade overnight, I'm going to owe a swap to the broker. So the interest between the two, again, is going to be the fee that is going to be taken away from my trade. Now, I know this sounds confusing, but there is an easier way to do this. If you go to Google and you type in Forex swap calculator, there are going to be so many websites that pop up. You want to choose one of the websites to be able to get a swap calculator so you can calculate your swap before you even enter a trade. So today I'm on teletrade.eu and I'm using their swap calculator. And pretty much this is how it works. You're going to put in your instrument over here. So whatever instrument you have, you're going to put it in. Right now we're going to stick with AUD-CAD. Okay, the currency that your account is in. So we're going to choose USD for those who are in USD. Now, if I'm taking one lot or whatever lot I'm taking, I want to put that in and then I want to press calculate. Now, once I press calculate, it's going to tell me what my swap would be if I shorted the Aussie dollar versus the Canadian dollar, or if I took a long position on the Aussie dollar versus Canadian dollar. So if I took a one lot position on a sell for the Aussie dollar versus the Canadian dollar, I would actually be owed a swap of 0.07254. So I would be paid out that swap. Now, why is that? Now, if I'm selling the Aussie dollar, it also means I'm buying the Canadian dollar. And what most likely happened is that the Aussie dollar has a lower interest rate than the Canadian dollar. So the currency that I sold, again, you're going to pay interest for selling, you're going to gain interest for buying. The currency that I sold is going to have a lower interest rate than the currency that I bought. Therefore, me being owed a swap. Now, if I chose to buy the Aussie dollar versus Canadian dollar, then what would happen is I'm buying the Aussie dollar, which has a lower interest rate, but selling the Canadian dollar, which has a higher interest rate. Then as a result, I'm gonna owe a swap of 4.06241, okay? So you don't have to do this in your head. If it really matters to you what your swap is gonna be, especially when you have a much larger account, swaps can get pretty costly, then you can definitely use a Forex swap calculator, put in all of your information, then you can figure out how much swap you're gonna pay on that particular trade. And again, this fee is only applied whenever traders are gonna hold their trades till the next day. If you're a scalper or a intraday who's not gonna hold the trade beyond the day, then you don't really have to worry about this. But swing traders, you're definitely going to be affected by swap one way or another if you're holding trades for more than a day, okay? So commissions and swaps, definitely two fees that you cannot avoid, but still very important to be informed about them if you're gonna be trading the Forex market. Hope you guys gained value in this video, and if you did, please like, share, and subscribe. Until next time, Jordan the Maestro, peace.